Hello, everyone. And before we begin the weekly analysis, I'm happy to announce that I'll be starting my first Zoom online trading course of Forex, starting next Saturday, the 5th of March. And it will cover 6 weeks of theory with 2 hours for each session on Saturday, and as well as 5 live trading nights for the morning for the US trading session, and it will be on Tuesdays, except for Friday on the 1st of April, which will be a non-farm payroll news day. So that's the only exception, and the whole course will cost 1,888 Sing dollars, which hasn't changed for the last 9 years now since I started. And the conversion now is about 1,400 US dollars. And this will be a complete course, starting from the basics all the way through to advanced levels, techniques and strategies, and also covers a lifetime mentoring for all the students. And whenever there's a new course, they are always welcome to take a refresher as well, and no extra charge. So this will be a fairly good and comprehensive course for those who would like to further their knowledge and continue in a safe and profitable manner in trading. So do consider, and if you like to get more info, then do drop me a note on my email at my website, or here at the admin at easyfxcode.com, and I will send you some more info package. But do consider signing up, and I hope that this will be something that will further your aspirations and career if you wish to go deep into Forex trading. All right, so hope to hear from you all, and let's move on to the weekly analysis. Okay, so this is the weekly technical analysis for the Euro, Cable, and the Aussie dollar for the first week of March. And let's begin with the Euro here. And as everyone knows, Thursday was the first day of the Russian invasion into Ukraine, and all the major markets fell on that day, including the Euro here. So this was a fall of about almost 200 pips, and managed to bounce back about 85 pips or so towards the end of the day, and continued to recover through Friday as well. This is the 4-hour chart, and climbed back up into the previous support zone that we had identified. So it fell through that support pretty hard. So let's move this support down, and this was that was a major support level as well, right at the round figure 112. So let's mark this one here. Resistance will likely dip down lower now. This is going to be at probably at the 38 retracement, where the daily 55 EMA is, and with all these spikes up here, where it was not able to break out higher. And of course, the Euro would suffer since the invasion is just near its western borders. So after some consolidation, not able to break out higher, there was a drop below the 113, and that's where it fell from on the Thursday. So last week's news, there wasn't any key news events. The main event was just geopolitical and the flight to safety to safe haven currencies like the either spot gold or Japanese yen, as well as the US dollar. And this coming week, there will be some news from the Eurozone with the CPI flash estimates, but the major one that could be impact from the US non-farm payroll report. So yeah, the key news for last week was mainly the Russian and Ukraine conflict. On a weekly time frame, it still managed to find support from that swing low area. That's where it bounced back up to the 62-Feb retracement. So this was the previous swing low as well. That was the support level. Okay. Let's take a look at the US dollar index, DXY as well. For the DXY US dollar index, the breakout was on Thursday, which was the first day of the Russian incursion into Ukraine, and there was a flight to safety with the US dollar. So that spiked through the resistance here and the 200 Fib and almost reached the next resistance level. But then after that, it quickly fizzled out and pulled back down, almost back to the consolidation zone again. So that's when the news that after the incursion that there was no, apart from sanctions, there was not going to be any conflict with NATO or US forces. So it's either just Russian taking over the Ukrainian government and setting up their own. So it wasn't going to be an extensive, didn't seem to be going to be an extensive conflict. So, but hopefully everything all turns out well for the Ukrainian people as well. Okay, so for now, things have seemed to be settling down, and also with the even the markets getting a bounce back up as well. So let's see if US dollar is going to continue in a consolidation range again. And also with the upcoming non-farm payroll news this Friday, we'll see how it reacts to the news at the end of the week. Okay, all right, let's move back. All right, let's move on to the cable. And similarly, cable had a bad day on Thursday. And it's not surprising since Russia supplies 40% of the natural gas to the Eurozone and UK. So, but this was a more drastic impact than the euro. It fell over 260 pips here on Thursday. Managed to bounce back 100 pips, but only just a small consolidation range on the Friday, so it did not recover much on the Friday here. Let's expand this now. So it easily fell through the support of the daily 55 EMA. So there's definitely a support down here at the 78.6 Fib. And we can move the resistance down now from up here, way up here, probably also to the 38 Fib retracement. Also right near the daily 55 EMA. So before that, it also could not break out higher from this previous week's swing high. And Wednesday started to dip lower below the daily 200, and then Thursday was the fall. That was already a precursor of potential invasion. So on a weekly time frame, it shows a more bearish looking candle. And you can see that the bounce back basically bounced back up above the weekly 200 EMA. So we'll see if there's further support from there or whether it's going to dip lower. So we go back to the daily time frames. This is that's the near-term support at the 62 Fib. So price is around the 134.00 area now. For now, these fibs are still valid. So no UK news this coming week, no major ones. And so it also be exposed to the non-farm payroll report from the US. And also there's a couple of days of testimony from the Fed Chair Powell on Wednesday and Thursday as well, before the non-farm payroll report. Okay, let's move on to the Aussie dollar. And this coming week, the RBA will be pondering their rate decision. At the moment, there's no expectation that they will raise rates yet, although they are likely going to be pressured to do so soon. Their neighbor, New Zealand, has just raised rates last week as well. But on Thursday, the Aussie dollar did fall, but right into the support zone that we are identified at 0.7100 at the 38 Fib retracement, and then climb back up pretty quickly to recover that drop back up on the Friday, right back into the resistance zone. So the Aussie dollar seemed to be more resilient here. And this is likely due to the fact that it's also further away from the conflict area plus it's also potentially may gain from energy prices going up, as well as gold. So these two commodities are also supporting the Aussie dollar, as Australia does have these commodity exports. Okay, so yeah, it's a climb back up the 78.6 retracement level. So it's still poised for potential move up, depending on next week's RBA rate decision. And then towards the end of the week, it's also exposed to the non-farm payroll report. But yeah, this resistance level could be a strong one, with the daily 200 coming down, and this swing high at 73.14. So it could prove to be a strong resistance up here. Okay, so let's see how the US dollar moves for next week with these geopolitical tensions ongoing. I think I can remove this upper trend line here. The lower trend line is still possibly valid, as could be another channel forming down below here. Okay. All right, so do check out my other videos on spot gold and dollar yen. And also, if you're keen on my Zoom online trading course, do drop me a note, and I'll get back to you with more info. So have a good trading week, have a safe week, and cheers for now.